Welcome to Dave's Daily Crypto Take. Today is Tuesday, July 13th, 2021. Let's take a look at today's charts. At number one, we got BTC at $32,862, down 4.08%. Ethereum at number two, $1,988, down 7.33%. At Tether, number three, $1. Binance Coin, number four, $310.40, down 5.12%. Cardano at number five, $1.29, down 4.6%. XRP at number six, 62 cents, down 4.1%. USD coin number seven, $1. Dogecoin number eight, 20 cents, down 6.37%. Polkadot at number nine, $14.50, down 6.46%. And wow, Uniswap at number 10, $19.04, down 9.53%. So pretty much red all across the board. With the crypto fear and greed index, extreme fear can be a sign that investors are too worried. That could be a buying opportunity. When investors are getting too greedy, that means the market is due for correction. And today we got extreme fear at 20. Wow, yesterday was extreme fear at 25, last week extreme fear at 20, and last month extreme fear at 23. So before we take a look at the table of contents, I just like to say welcome to Dave's Daily Crypto Take, everyone. If you're listening on Apple, Google, or Spotify podcasts, thank you so much. I see a lot of listeners all the way around America, Europe, and Asia. If you're on the YouTube video channel, then yes, it's Dave's Daily Crypto Take. Do what you can by supporting me by liking, sharing, and subscribing. It does help the algorithm. So the more views, the more listeners. And if you watch the video or podcast until the end, it does help it. And it could reach more people that would like to hear unbiased news about crypto world and cryptocurrency. So again, I just want to say thank you so much, and let's get back to it. So today we got 6 articles. Article number one is leaked JPMorgan report reveals extreme Bitcoin price volatility, warning as Ethereum crash adds to $100 billion crypto rout. Article 2, Fidelity commits to crypto, increases digital assets staff by 70%. Article number 3, cryptocurrency trading volume plunges as interest wanes following Bitcoin price drop. Article 4, is it worth betting on sushi in the short run? Article 5, how gold-backed cryptocurrency is changing the modern investment landscape. And last, Article 6, 15 environmentally sustainable cryptocurrencies to invest in right now. All right, let's get to it. Article number 1, leaked JPMorgan report reveals extreme Bitcoin price volatility, warning as Ethereum crash adds to $100 billion crypto rout. Bitcoin has swung wildly through 2021, following along with the second largest cryptocurrency, Ethereum, after huge runs and dashing hopes that growing adoption among retail investors and institutions would bring stability to roller coaster crypto markets. The Bitcoin price is down around 50% from an April peak that saw it more than double in the first 3 months of the year. Ethereum has fallen even further from its May high of well over $4,000 per Ether token, today dropping a further 5% and dipping under $2,000 amid a cryptocurrency sell-off that's wiped around $100 billion from the combined crypto market in less than a week. Now, Wall Street giant JPMorgan, after correctly calling May's cryptocurrency crash, has warned over El Salvador's controversial plan to adopt Bitcoin as legal currency, pointing to Bitcoin's low trading volume outside of major exchanges and its extreme price volatility as possibly a significant limitation on its potential as a medium of exchange. So, daily payment activity in El Salvador would represent around 4% of recent on-chain transaction volume and more than 1% of the total volume and value of tokens which have been transferred between wallets in the past year. JP Morgan analyst wrote in a report out last week and seen by Bloomberg, adding a significant and rising fraction of Bitcoin is held by wallets with light turnover. The report pointed on Bitcoin trading volumes that commonly exceeded $50 billion per day, but mostly happened on major crypto exchanges, with a large portion of Bitcoin now thought to be locked up in illiquid entities and 90% of Bitcoin not moving in over a year. El Salvador President Nayib Bukele announced his plan to make Bitcoin legal tender in the country alongside the US dollar in early June at the Bitcoin 2021 conference in Miami. The plan was received with great fanfare, but it remains light on detail even after it was rushed through the country's Congress, passing into law just days later with little scrutiny. Bitcoin proponents, led by Bukele, claim El Salvador's formal adoption of Bitcoin in early September will cut the cost of remittances and boost financial inclusion among the country's unbanked. However, JPMorgan researchers see Bitcoin's high volatility as a major challenge alongside the country's official dollarization and warn a high demand for Bitcoin to US dollar conversions on the government's Bitcoin spending platform could cannibalize onshore dollar liquidity. So right now, Bitcoin price is $32,833 at the time of press. Meanwhile, Bitcoin rival Ethereum is also grappling with eye-watering volatility as the sell-off that began in May drags on. While Ethereum has seen a flood of adoption and attention this year thanks to the twin decentralized finance DeFi and non-fungible token NFTs craze, both overwhelmingly built on Ethereum's blockchain. The Ethereum price has swung even more wildly than Bitcoin. But despite its heavy losses over the last few weeks, those who have invested and work with the technology remain confident it can succeed. With Ethereum, you are betting on the adoption of a protocol in the realm of decentralized finance and smart controls. JP Theriot, the chief executive of New York-based digital money platform Uphold, said in emailed comments, "The genie is out of the bottle and it isn't going back in." So there you guys have it. What do you think? Leaked JP Morgan report reveals extreme Bitcoin price volatility, warning as Ethereum crash adds to $100 billion crypto rout. Comment down below and let me know what you think. Article number 2. Fidelity commits to crypto, increases digital assets staff by 70%. So let's take a look. Growing demand from institutional investors has pushed Fidelity to increase its Fidelity digital assets team by 70%. According to an article from Bloomberg, Fidelity Digital Assets will add around 100 workers to offices in Salt Lake City, Boston, and Dublin. In the interview with Bloomberg, Fidelity's digital asset president, Tom Jessup, said that the previous year was a major breakthrough in terms of how much interest Bitcoin has attracted. Last year was a major breakthrough for the space, given the interest in Bitcoin that accelerated when the pandemic started, said Jessup. He also mentioned that Bitcoin has been the main interest of institutions entering the space, but that institutions are broadening their scope. Bitcoin has really been the entry for a lot of institutions. It's now really opening up a window on what else is going on in the space, said Jessup. He also added that there is a shift in the diversity of interest regarding different digital assets between new and older clients. Jessup also said that there's an increased interest in Ethereum and that the company wants to be ahead of the trend. We've seen more interest in Ether, so we want to be ahead of that demand. Fidelity Digital Assets only offers custody and trade execution services for Bitcoin, but it looks like they would like to expand this offering to more assets as well as offer trades on more than just weekdays. We want to be at a place where it's full time or most of the week, said Jessup. So, what do you guys think about Fidelity and its commitment to crypto, increasing digital asset staff by 70%? Let me know down below what other companies are increasing their staff members to accommodate the digital assets realm. Article number 3 is cryptocurrency trading volume plunges as interest wanes following Bitcoin price drop. So, two main points about this article. Number 1, trading volumes at the largest exchanges, including Coinbase, Kraken, Binance, and Bitstamp, fell more than 40% in June, according to Crypto Compare. In June, the price of Bitcoin hit a monthly low of $28,908. The daily volume maximum of $138.2 billion was down 42.3% from the intra-month high in May. So, cryptocurrencies are in a summer slump as they navigate a 2-month correction period following a string of negative stories. Trading volumes at the largest exchanges, including Coinbase, Kraken, Binance, and Bitstamp fell more than 40% in June, according to data from crypto market data provider CryptoCompare, which cited lower prices and lower volatility as the reason for the drop. In June, the price of Bitcoin hit a monthly low of $28,908, according to the report, and ended the month down 6%. A daily volume maximum of $138.2 billion on June 22nd was down 42.3% from an intra-month high in May. The report pointed to China as a major catalyst, according to Reuters, which reported on its early Monday. China's latest of many efforts over the years to crack down on the industry have had a greater impact than ever before. Investors and experts in the cryptocurrency ecosystem still see a long-term positive trend for Bitcoin and other cryptocurrencies. However, the Chinese crackdown has caused a lot of fear, which is showing up in markets, said Teddy Valley, Chief Investment Officer at Prevail Global. The digital asset ecosystem got punched in the face, so it's currently up against the ropes versus fighting in the middle of the ring. Typically, when you have large sell-offs, participants are quite fearful and pull back their chips. Valley added that he still isn't seeing large flows back off exchanges. Funding rates are still negative. The number of new wallets is lower. So, what are the factors behind the slowdown? At the end of June, China ordered a halt to cryptocurrency as it prepares to launch its own state-backed digital currency. That shuttered mining and operations across various provinces that had hosted 50 to 60% of all of Bitcoin's mining power. Gaber Gerbax, the director of digital asset strategy at Van Eck, noted that as miners left China, they weren't transacting as much with the Bitcoin they've mined. Additionally, the emerging ESG narrative around Bitcoin's proof of work consensus mechanism and negative regulatory undertones from the Financial Action Task Force, the Intergovernmental Anti-Money Laundering Watchdog, have dragged the mood down even further in the markets. Ben Foreman, managing partner at alternative investment firm Parafai Capital, told CNBC ESG stands for environmental, social, and governance factors. Once these stories began to permeate through the market in May, sentiment dropped to single-digit levels on a scale of 1 to 150, said Nick Massini, research analyst for crypto sentiment analytics firm Trade the Chain. Eventually, this resulted in a trading volume for Bitcoin dropping by nearly half since its peak, and it's further down 32% from its June average. Gerbax also said that summer can be a time of lower volume, even in equities, and that investors may still be feeling the pain after the crypto market has lost so much of its value this year. This year, too, he added, the price of Bitcoin climbed as high as $60,000 and Ether as high as $4,000, which brought a lot of new interest and new investors into cryptocurrency that haven't weathered a Bitcoin bear market yet. People are getting tired of the rock pools, Gerbax said. When cryptocurrencies hit their all-time highs this year, a lot of people invested upwards and a lot of new people invested at the top and they lost money, he added. Half the market is gone. We can't expect the same volumes when the market is basically a lot of people who are new to the space who got spooked. So, volume still higher than a year ago. Despite the dramatic drop in trading volume, it's still much higher than it was last year, Clara Medeli, research lead at crypto market data provider Kaiko. Volumes plunged in June on pretty much every exchange. However, overall volumes are still magnitudes greater than they were 1 year ago today, Medeli told CNBC. June volume still ranks in the top 5 months of volume ever recorded, she added. While the drop was steep compared with May, it is an unfair comparison because May saw the biggest and highest volumes ever recorded due to unprecedented liquidation events. Volumes have reverted to early 2021 amounts and are still massive compared with 2020. Mancini of Trade the Chain still sees a more bullish rather than bearish outlook for crypto and expects volatility and volume to return to previous highs. The Bitcoin daily candle Bollinger Bands are now tightening very similar to what we saw in July 2020, which resulted in explosive bullish price action, he said. We believe that with more institutions publicly announcing crypto trading and research divisions, sovereign nations adopting Bitcoin as currency, and miners moving to more democratic nations, Bitcoin is poised for growth instead of shrinking. Bitcoin derivatives peaked at $230 billion in May before waning to $45 billion on June and July 9th, according to Trade the Chain. The one positive set of news from the derivatives market is that Bitcoin options pull to call ratio is now sitting at 0.60 from a high of 0.65 in June, which means the traders are becoming less bearish at the month's progress, Mancini said. So there you guys have it. It says cryptocurrency trading volume plunges as interest wanes following Bitcoin price drop. Comment down below and let me know what you think about this. So I'd like to take the time just to say thank you so much to all my subscribers and all my supporters so far. If you haven't made it this far into the podcast and YouTube channel, I remember I'm on YouTube. I'm also on podcasts with Apple, Spotify, and also Google Podcast. It does help the channel if you leave a review on those podcast channels because the more reviews, the more feedback, and the more ratings that I can get, the more it can spread to people looking for crypto news, especially unbiased news. And on the YouTube space, if you can, comment down below on what you think so far about the channel and if there are any requests or updates you want to listen to or hear about in the next few videos and takes. So again, thank you so much for everyone, and I appreciate all the love and support. Thanks. All right, let's keep on going. Article number 4 is it worth betting on sushi in the short run? So here, sushi's price action over the past year has been quite dramatic, and the asset has had its share of ups and downs. As a matter of fact, it witnessed a massive spike of over 424% in the aforementioned time period. The alt's uptrend started gaining traction from November last year, and within a span of 4 months, sushi recorded its $23.38 all-time high. Right after a scripting history, the asset was subjected to a downtrend. Earlier in June, sushi lost its $9.4 support level and has been trading below that mark since then. What's more, sushi was the 6th largest DeFi token a couple months back. It is now 8th on the list, and its total value locked TVL that reflected $4.4 billion in early May plunged to merely $2.76 billion at the time of writing. Setting aside the price charts, the token's on-chain metrics also hardly provided any sign of relief. Development activity, for starters, has most of the time acted as a catalyst for any asset's price uptick in the long term. Sushi's dev activity began picking pace in the last week of June, but was quick enough to change its course and began its downside on 6th of July. At the time of writing, however, the curve seemed to have touched its parabolic bottom and was on the verge of heading northwards. At this stage, it becomes important to note that developers are currently working on Sushi's NFT platform, Shoyu. According to the project briefing, Shoyu would incorporate yield farming features and is expected to evolve into a 3D metaverse in the near future. This development is expected to rub off positively on the token's price in the upcoming months. Other metrics too provided mixed signals. Exchange inflows and outflows, for instance, though exchange outflows have been falling since 6th of July. It should be noted that it has, by and large, been able to override the inflows on 10th of July. The total outflow reflected a value of 966.33K, while the inflow data on the same day reflected 881.15K. Now, a drop in exchange flows indicate that sushi hodlers are clinging on to their holdings and that to a certain extent stirs in a positive narrative amidst the drop in the outflows. The token's transaction volume too has been falling from 6th of July and showed no signs of respite at the time of writing. However, Sushi's daily active addresses has consistently been spiking once in every few days, proving to be the token's only helping hand. Looking at the indecisive state of the on-chain metrics, Sushi's price is unlikely to see any massive reversal in the short run. Hence, an uptick at the moment merely remains a long shot. Nonetheless, the NFT and DeFi space is likely to grow with time. And keeping in mind Sushi's development activity, the token's long-term future is worth taking a chance on. So, what do you guys think about Sushi? Is it worth betting on Sushi in the short run? Let me know and comment down below if you hold or if you're thinking about getting sushi in the future. Let's take a look at Article 5, how gold-backed cryptocurrency is changing the modern investment landscape. So here, the proliferation of online markets and the introduction of new cryptocurrencies has launched a brand new type of token. Companies are now digitizing the value proposition of gold, one of the oldest, most stable currencies in the world. The result is a liquid crypto asset backed by the benefits of physical gold. Blockchain technology enables financial leverage, liquidity, and monetized physical gold holdings. In 2021, Bitcoin and Ethereum have been the market leaders, posting record highs for investors. But then came the crash in the wake of Elon Musk's half-handed tweets, plus China promising increased regulation. This kind of volatility attracts recreational investors who see big risks as a natural corollary of even bigger gains. But more cautious investors have stayed on the sidelines, unwilling to take those chances. Historically, gold has been a protective hedge against inflation. Experts like Timothy Ord, president and editor of the Ord Oracle, predict that gold stocks could see 10x gains in the next 3 years. In addition, Wall Street Gold estimates are bullish for 2021. Gold is expected to hit $2,300 to $2,400 an ounce. Goldman and Citibank say, and the metal looks poised to continue that bullish trend, which started back in September 2018. This innovation comes at a time when investors have been searching for safe havens. They're facing massive amounts of liquidity in the economy, created by government stimuluses that were designed to shield the economy from the impact of the pandemic. Tether offers a more stable crypto investment, protected from the bigger crypto market swings, but even fiat currency backed cryptos are vulnerable to potential inflation, and investors are wary how that can impact a currency's buying power over time. To hedge against these inflation fears, investors have turned to commodity backed cryptocurrency projects, such as those leveraging safe haven commodities like precious metals as their store of value. For cautious investors, gold backed tokens combine the structure of gold investments with the scarcity, flexibility, and upside potential of the crypto world. And they're set to bridge the gaps for investors who are uncomfortable launching into the world of cryptocurrency investing, those who dislike fiat currency, and those who are looking for more secure investments. Asia Broadband Inc. is entering the fray with its AABB gold token. It's a gold backed currency, but the company is going a step further with its unique proposition. The gold they're backing their token with is directly produced by their gold mines. Backing currency with gold offers investors a major competitive advantage over their junior mining companies, says Chris Torres, CEO of Asia Broadband Inc. The unique mine token product can become a worldwide standard of exchange, secured, and trusted with gold backing. The company is acquiring highly prospective gold projects in Latin America and distributing production through an extensive global sales network. In January, Asia Broadband sold its main mining operations in the Guerrero Gold Belt in Mexico for $82 million. The sale produced $30 million in gold bullion, which provides the backing for the company's tokens. They'll continue to strategically target gold mineral properties to back continuing token sales, Torres says. But if token demand exceeds the company's supply of gold, bullion is available from third-party sources and can be purchased using proceeds from the token sales. The minimum price of the AABBG token is maintained at the current spot price of gold, which reduces purchasers' investment risk, Torres adds. On the flip side, token price will rise with the price of gold. Since the pandemic, the value of gold has continued to rise, Torres says. We believe the price of gold will increase over $2,000 to $3,000 an ounce over the next 24 months, he explains. And the rising price of gold is just the minimum company, supported price of our AABBG token, which adds security to its investors. Most importantly, the token price will continue to appreciate based on its market demand and the limited supply of tokens available for purchase and exchange. The company has released over $5.4 million tokens to this point, or the equivalent value of the gold bullion in the company's treasury. In 2020, AABB saw $16.8 million gross profits. And as gold mining operations move forward, we expect revenues and gross profits to be strong in 2021, surpassing our previous year's achievement, he says. The company's primary goal is to make its token a worldwide standard of exchange, Torres says. It's working now to aggressively expand token circulation to the primary sales market in both North America and Europe, and also globally. The company has been developing their own proprietary exchange, which will allow AABB wallet users to complete quick two-way exchanges of their AABB gold tokens for major cryptocurrencies such as Bitcoin, Ethereum, and Litecoin. The proprietary exchange will also add to transaction fee revenues and allow for the price appreciation of AABBG beyond the price of gold, influenced by the market demand and the limited supply of tokens released into circulation. The exchange completion timeline is on path for testing in mid-August, with the live exchange launch expected in early September. So, what do you guys think about this? How gold-backed cryptocurrency is changing the modern investment landscape? What do you think about AABBG token? Comment down below if you think it's a viable option, or would you like to still back the hardcore gold ounces? Comment down below and let me know what you think. All right, let's get to our main topic for today. Is 15 environmentally sustainable cryptocurrencies to invest in right now. So, cryptocurrency might be best known for its potential financial risk, but it's increasingly under fire for another less than desirable issue. In recent months, concern has swirled around the negative impact that crypto is having on the environment. That impact, in a nutshell, is that a cryptocurrency trading becomes more common. So does energy use as a result of it. So, the cost of mining coins and tracking transactions. Estimating the energy consumption involved with cryptocurrency mining is a complex task, but it's generally understood as the energy used to digitally mine crypto coins and process trading transactions, plus the power usage of the hardware devices used to support these efforts. Estimates vary, but some analysts place the annual energy consumption tied to crypto as being on par with a small country. So, 15 environmentally friendly crypto options. If you're interested in investing in digital currency, but also want to do so in the most eco-conscious way possible, take a look at these cryptocurrencies, which are helping the industry forge a thoughtful and expedient path to sustainability. So, number one, Algorand. Algo. In April, Algorand declared its blockchain to be completely carbon neutral. This crypto has also fostered a partnership with Climate Trade, an organization dedicated to helping companies improve their sustainability profiles. 2. BitGreen. BitG. BitGreen's preferred form of industry disruption is financial incentives that can drive toward policy change. This fall, it plans to launch its anticipated new mobile impact wallet. The app will allow users to record their environmentally friendly actions, such as using a rideshare service, and will offer financial rewards for doing so. 3. Cardano. Created by Ethereum's co-founder Charles Hoskinson, Cardano refers to itself as a third-generation blockchain. It's the first blockchain to use multiple layers of technology. This cryptocurrency has recently been the target of some backlash over its struggle to gain the kind of momentum that Hoskinson had planned, but it's still the world's fifth largest cryptocurrency. 4. Chia, XCH. Chia, which was created by Bram Cohen of BitTorrent, can be mined on Amazon Web Services cloud computing platform. It puts a user's desktop to use by offering downloadable software that allows users to earn Chia tokens by running the decentralized platform on their hard drives. 5. Devio. With a rumored summer debut, startup Devio is a potential up-and-coming green offering in the space. Devio claims that its blockchain network can solve problems that others have not, including integration with financial institutions and efficiency. Devio claims that it can process up to 8 million transactions per second. 6. Hedera Hashgraph, HBAR. Hedera Hashgraph's popularity is on the rise. Having recently surpassed Ethereum, in a number of trades, the technology behind this crypto is complex, with the system relying on a node comparing protocol that eliminates the need for progression through the entire blockchain. The crypto plans upgrades in late 2021 that will allow for sharding, will fragment the network, and in doing so, allow for growth in the number of transactions without an energetic downside. Number 7, Holo, hot. Holo sets out to provide its users with its own blockchains. Each individual agent or host exists as both its own storage site and blockchain, and earns Holo tokens in return. Holo is growing rapidly in popularity, particularly because of the potential this crypto has to empower anyone interested in cryptocurrency still sitting on the sidelines to jump and invest. 8. IOTA, MIOTA. IOTA doesn't rely on a blockchain. Instead, this crypto uses a cryptography-based method of verification called directed acyclical graph, DAG. This allows transactions and verifications to keep pace with each other in real time. 9. MetaHash. This decentralized open source cryptocurrency runs on blockchain 4.0 and claims a validation rate of fewer than 3 seconds per transaction. 10. Nano. This cryptocurrency doesn't rely on mining, which means that its carbon footprint is already fairly negligible. This is because Nano's process for confirming transactions skirts the need for entire blockchain, improving speed and efficiency without any risk of increase in energy consumption. 11. Ripple, XRP. Ripple, which is a digital tool rather than a currency, describes itself as an open source, permissionless, and decentralized blockchain technology that can settle transactions in 3 to 5 seconds. 12. Signum, Signa. The blockchain that was formerly Burstcoin is now Signum, which plans to take the lesson from Burstcoin and rebuild thoughtfully. Goals for the rebirth include a focus on sustainable mining, decentralization, feature innovation, low fees, and widespread accessibility. 13. SolarCoin, SLR. This crypto runs on real time in real-life energy conservation. Each hour of power generated with the use of solar technology creates one new solar coin. Although the burden of proof is on solar power users, there's an automatic financial incentive for doing so. 14. Stellar Lumens, XLM. Stellar Lumens is a cryptocurrency for Stellar, an open source blockchain system that offers an open source payment alternative. Stellar excels at efficient cross-currency transactions, which matters more as cryptocurrency trading becomes more common. 15. Tron, TRX. TRX is the dominant cryptocurrency on the Tron blockchain, which aims to decentralize the web. So, what do you guys think about all of this? Do you think that the top 15 environmentally sustainable cryptocurrencies to invest in right now is viable? Comment down below if you think any of these are going to go through or if you think they're going to fail. Let me know and comment down below. All right, let's take a look at the crypto prices one more time before we leave. BTC is at $32,845. Ethereum is at $1,988. Tether, $1. Binance Coin, $310.15. Cardano, $1.29. XRP, 62 cents. USD Coin, $1. Dogecoin, 20 cents. Polkadot, $14.51. And last but not least, Uniswap at $18.95. All right. So there you guys have it. Thank you so much for taking the time out of your day to listen and watch the video. This is Dave's Daily Crypto Take. Again, I am making these videos and these podcasts in an unbiased way. Some of the news and updates would be for Bitcoin and for crypto, and some of them might be against Bitcoin and against crypto. So please do your own research. Think about what you want to invest in, or if you just want to watch from the sidelines. Again, this is not financial advice, so please take every news, every update, every crypto take with a grain of salt. And if you can, please comment down below and let me know what you want to see in the future. In the podcast, you can catch me on Apple Spotify, and Google Podcasts on mobile or on desktop, or even on listening devices like on the Amazon Echoes or Apple HomePods. So again, I just want to say thank you so much for taking the time to listen, and I'll see you in the next Crypto Take. Have a good one and take care. Peace.